Atlanta Fed President Raphael Bostic noting that progress on inflation is still slow, even if it has resumed falling. Now, Goldman Sachs economists also weighing in on rates. Jared Blikre has the details on that. Jared.
That's right. Raphael Bostic is the latest of a plethora of Fed speakers this week to come out saying that the Fed may have to keep rates higher for longer. That doesn't sound like anything new, but there are some new details here because the Fed is in danger of being on the wrong side of inflation once again, with everybody remembers the transitory episode from a few years ago. As far as interest rates, Bostic is suggesting the Federal Reserve may need to delay cutting rates, potentially keeping the current rate, which is 5.25% to 5.5%, longer than expected because the U.S. has not passed that critical point at which inflation, we can say, is in the rearview mirror. And yesterday, it was only yesterday that we got the composite PMIs. Those are purchasing manager index surveys. Those came out at the highest level since April of 2022. That's important for a number of reasons. This is a small report that doesn't usually move the market, but it suggests, according to S&P, that what's interesting, and this is a quote from S&P, what's interesting is that the main inflationary impetus is now coming from manufacturing rather than services. So getting back to Bostic, another thing that he said was that I thought was interesting was the Fed is going to conduct a new framework review of its inflation target in 2025. That's next year. Currently, that target is 2%, but the Fed has been making the case very slowly that maybe, just maybe, that needs to rise. Guys.